Okay, so welcome to this month's Performance Monitor. So today I'm going to analyse stock markets and look at what are the key themes that we're seeing within markets right now. Okay, so let's firstly look at markets right now. And as you can see from the slide, the UK has been a good, strong performer. And what we're seeing is actually a lot of commentators are believing that the UK company fundamentals are improving. If we look at bonds, the more traditional areas of the bond market have actually been struggling a little bit. And that's because yield levels are at such depressed levels compared to historic norms. And then finally, if we look at currency, you can see that sterling's weakened against both the euro and the US dollar. And a lot of people think that's quite a negative thing. But actually, if you're a sterling-based investor buying overseas stocks, that gives you a better return. That helps to add to your return. Okay, so let's move on and have a look at the key issues. So the first key theme for this month has been the US election. Obviously, you will have seen a huge amount in the news, big debates between Hillary Clinton, Donald Trump. If we look at the polls right now, Hillary Clinton is by far the leader within the polls. If we start off at looking at each candidate, Donald Trump's seen as a little bit of a wild card, but in other ways he's actually seen as being quite pro-business. He's very anti-low interest rates. I think looking at Hillary, she's the asset manager's favourite, so she's the stock market's favourite right now. I think the one thing that some fund managers have been saying to me is actually Donald Trump could be a bit like a Brexit result if he were to win the election. You know, something that potentially could be positive. The one thing that we need to realise though is as an investor is you can't actually second guess these things. The best way is to be as fully diversified as possible within your investments, and that helps you navigate through the US elections, but also any potential aftermath after the election result. Okay, so let's move on to Europe. And you will have noticed, markets in general, in the developed markets anyway, currently are quite high, especially compared to the historic levels. However, Europe isn't. Europe's been struggling with a mixture of political risk, but also as well as that banking problems. I mean, political risk stems from upcoming referenda in Italy and in the Netherlands. And also there's forthcoming elections that we're going to see in France and Germany. Banking risk, I mean, you will have sort of seen stories around Deutsche Bank, the problems that they've been having with potential fines. If we look at that, I think it's very sort of contained within Deutsche Bank. We don't feel like that's a systemic risk throughout the whole European banking sector. On the other hand, though, there's a lot of really good European companies with sound fundamentals. And actually, there's a lot of quite good value there for fund managers. I think if we look at the outlook now, I think investors are in two camps. So the first camp is that they're a little bit nervous. They feel that markets are quite high. And I think the second camp is that they feel markets are high, but could go further with the continued accommodative monetary policy. I think the one thing you need to realise is for the former, is that they're looking for downward share price correction with an eye to buying, not selling. So they're looking to put more money into the market. So finally, for me, I think what I want to talk about here is the benefit of multi-asset investment. And if you look at multi-asset investment, that means you can move to different countries. It means you can invest money in different asset classes. It means you can invest money in different currencies as well. Here at True Potential, we offer a new advanced level of diversification, which is investing using different fund manager styles. Timing the markets perfectly is generally regarded as being extremely difficult, and it's one of the reasons why we encourage long-term investing and impulse saving when markets are evidencing price weakness. All of this can help you as an investor to enjoy the fruits of your investment experience even further down the line. Okay, thank you very much.